Hello people, what's happening? This is the Complete Trader. And in this video, guys, I want to share with you a trade that I took on gold dollar. And if you remember, guys, I gave you guys this concept or strategy for free right here on this channel. Now, this is something that has been sold for hundreds of dollars elsewhere. And if you doubt me, guys, I can drop you the link of that. But you see, that is one thing about my channel. Here you get some really quality information for free. And also, if you want to learn more, we have course that talks about trading currencies, indices, Bitcoin, and so on and so forth. You can contact me if you want to learn more about that. But in this video, guys, I want to share with you my trade on gold. Okay, so right now this trade is running about 50 under 580 pips. If I measure, this is the entry point around that area right there is the entry, and that is where price is currently. And you can see that is around 580 pips thereabout. Okay, and that's just a trade of 2 days. Okay, and now I'm going to show you exactly how we took this trade, and this is all based on what I've taught you guys right here. But I just choose to make this video so that I'll show you in practical terms what is it like to have the kind of powerful information that you guys are getting from me. All right. So uh you never get something like this elsewhere, guys. And that's for sure, right? So how did I come up with this trade? How did I take this trade? Okay. Now I taught you guys something right here on this channel in one of my videos, and then I also gave you guys a free book on how to trade gold. Okay, and that's exactly what was used in this. Okay, so let me take you guys to trading view, and then we can take a look at that. Okay, now right here, what we have is gold versus dollar right here. That's the bottom chart, and up here, what we have is the tips. That's the tip chart inverted. Okay, so the tip chart right here is inverted. And if you don't understand all that I'm saying right now, you should just go back and watch the video that I made, and it's right here on this channel. And you can also download the free book that I give out. So if you can't find a link to that ebook, you can just give me a message, and I'll give it to you guys. Okay, so I said that whenever the real yield is going up, gold is expected to go down. And the whole idea is quite simple, but you need somebody to point it out to you. So when real is going up, what does it mean for gold? It simply means that number one, the cost of gold is the cost of holding on to gold, which is the carrying cost for gold, is rising. And at that same point in time, we have interest rate going up and rising faster than inflation. So cost of gold is rising. Okay. Now inflation expectation is dropping, or you have nominal yield actually rising faster than inflation. So which means that the main reason why people are going to be holding on to gold is actually declining. Okay, that reason is actually fading out. Okay, and you understand that when people trade gold and currency, so in this case we're looking at the dollar. When people trade gold and the dollar, for instance, they're actually making a choice between holding on to gold or holding on to dollar. So there's got to be some reason why they're doing that. Okay, so why people hold on to gold is because they want to hedge against inflation. Okay, so whenever there's inflation, they want to hedge against that. And inflation simply means that the fiat currency is losing value. Okay, now the opposite of that is when you have falling inflation and the fiat or the currency is gaining value, in the sense that the yield, the interest rate begins to go up. So interest rate is the incentive for investors to hold on to money, to fiat. Okay. Now inflation, on the other hand, is the reason why people buy into gold. All right. So when we have interest rate rising faster than inflation, that means that people will want to opt in for currencies rather than gold. Okay. But if we have gold rising, oh, that's sorry, if we have inflation expectation rising faster than interest rate expectations are rising in the market, then you would see investors buy into gold. Okay, so what we had last week on Friday was that the CPI, that's the Consumer Price Index, was released in the United States, and just immediately, the numbers was actually higher than expected. Okay, and so because people were scared of inflation, we saw lots of people begin to put money into gold. So that means value began to flow into gold. And then we saw gold rise across board. So if you pull up the chart of gold versus euro, gold versus pound, gold versus Japanese yen, you will find out that gold was appreciating against all the currencies. And that was because they were expecting to see higher interest, higher inflation, or they were actually, a better way to explain it is this, that they were actually caught unawares. They saw inflation numbers that was beyond their expectation. Okay. And so they were reacting to that situation. All right. Now, something else was happening at that same point in time. Now, when you look, this was actually the price action of Friday. This push we see right here, this strong push to the upside. When we look at the real chart right here, we see that the real chart was actually going up. So while white gold was buying here, real was going up. This simply means that there was no solid underlying fundamental behind the rise of gold. You get that point now? So if real is rising, that is telling us that the incentive for holding on to dollar, okay, is also rising. It's increasing. So people will want to hold on to dollar as against holding on to gold. All right. And if real is rising also, it also means that the cost of holding on to gold is also rising. So you have a situation where the cost of gold is rising, or the cost of holding on to gold is actually rising, while the incentive for holding on to money, fiat, is also increasing. And that's the situation we had right here. So gold was rising, whereas the real was also rising. So the perfect situation would have been that gold was rising and real was dropping. Okay. So that would have been a very good situation where we have the fundamental, lining up. But right here, we saw divergence. And each time we see divergence like this, we like to go with the real fundamental, because the market, the big investors will want to come back, and obey the real fundamentals that's actually happening, because this was just an emotional reaction to the numbers that were given out. Okay, so but by the time they consider the true situation of the market, by the time they assess the true situation of the market, they would find out that, oh, they've actually done what's wrong. And that's exactly what we saw come on Monday. That was when the new week opened up, we saw gold sold off very aggressively, very strongly, and the sell-off continued on Tuesday. Okay, now all that while we saw the real going up now. So you see that now the movement of the two chart now has lined up. Okay, so they are lined up right now. So because now you see the real is going up, so it makes sense for the gold, or for gold to actually drop. Okay, so that's the reason why I took that trade. So let me take you back right there, and so we'll look a little bit at the technicals. All right, so this is the trade again, guys. So we saw this was a rise on Friday, and then come Monday, market dropped off. Now this line we have right here, let me go to the let's take you to the forward chart first. Okay, so we can see that line we have right here. That's a weekly high. Okay, so we see price rising to that weekly high to take liquidity. Okay, same price level on the 1 hour chart. See how price rose into that level to grab liquidity, right? And then on Monday, it dropped off. And the moment we got a little point of liquidity right here, that was the point we actually sold gold, and then look at a massive run. All right, look at a massive move, somewhere about 580 pips right now, in just 2 days, guys. That's a whole lot. It's massive. All right, so that is exactly how I trade, guys. First thing I want to look at is I want to really make sure that there is the underlying fundamental behind my decision to either buy or to sell a particular asset or an instrument. So that's the first thing I want to do. Okay. You don't just want to jump into the market to buy any asset or any instrument. You don't want to do that, because in this market, what actually moves price is market orders. So you want to really make sure that you have the big investors, the big market participant, that's the central bankers and the big investors. You want to have the set of people behind your trade. Okay, you want to have this kind of people behind the trade. And so for you to have this kind of people behind the trade, you have to see underlying fundamentals, the real things that those people are looking at for them to take actions in the market. That's exactly how you do it, guys. So that is it for this video, guys. If you want to learn more, this one right here I give you guys for free, but you can also do things like this for currencies, for Bitcoin. You know, right now we have Bitcoin traders, really, they don't know what's going on. Um, right? But that's because they don't pay attention to the underlying fundamentals. Most people are just taught on how to trade just technicals and all of those things. But if you want to stay long term in this market, you have to understand how to look at real fundamentals. Okay, how the things that actually affect the sentiment of the big players in this market. You have to pay attention to that. Now, I'm not saying technicals are not good. Technical is good, but that's for a short-term trader. So technicals are somewhat limiting. But if you really want to understand how this market operates and you want to really become a professional in this game, you want to stay long, you need to understand how the market operates, what makes it tick, and so on and so forth. All right, so that's it for this one, guys. I hope you're blessed, and I would like you to share the content, like and subscribe. So cheers and God bless you all.